20% of the world's annual gold supply being mined in China, and there's heavy export restrictions on gold from China. And the question mark is, where is all that gold going? Is China secretly acquiring gold through the back door by buying up some of its own gold production?
China's secretive gold purchases help fuel record rally. And this is not like the research we've seen from people like Alistair McLeod and others that say that China has over 30,000 tons. This is just this year. Apparently, I think it's Jan Neuenhaus. He's been looking at the customs number between the UK and China, and they've increased a lot.
When markets collapse and confidence disappears, the most important moves are often the ones happening out of sight. Clive Thompson explains that during a market crash, almost every asset drops at first, including gold and silver, because investors rush to sell and raise cash. Once the panic subsides, capital must be reinvested, and investors begin searching for assets they trust. He believes that in the recovery phase, gold and silver will become the preferred destination for capital as confidence shifts back toward hard assets. This expectation aligns with what Thompson sees happening in China. He highlights the unusually large shipments of 400-ounce gold bars being delivered there, bars typically used by central banks, not retail investors. The Shanghai Gold Exchange generally trades 1 kilo, 3 kilo, and 10 kilo bars, which makes the import of central bank grade bars especially significant. At the same time, China mines around 20% of the world's annual gold supply and imposes strict limits on gold exports. The combination of high imports and substantial domestic production raises a critical question: where is all that gold going? Based on multiple estimates, he believes China may already hold around 7,000 tons of gold, nearly 3 times its official figure. He also notes that China's foreign exchange reserves have barely changed since 2014, despite a growing trade surplus. To him, this implies China may be converting surplus earnings into gold rather than reporting them as foreign currency reserves. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors. Don't forget to tap the bell icon for more daily insights into the financial system. Thanks for watching.
Well, when something loses its value rapidly, like a country going bust or a stock market going down, there's nothing which can escape it in the short term, but because everybody reallocates. So there will be selling of silver and gold in a stock market crash, and also the gold mines will go down. But what then happens is the reevaluation of where people want to park their money. So now they've sold, they've got the cash, and they have to put it somewhere. And I think that's when they, on the recovery, that's when you start to see where the money's going to go. And my bet is that the amount of money which will head in the direction of gold and silver will be increasing. I just spoke today with the girl who works at a major gold selling company here in Switzerland, and she said they've got more customers coming in than ever before, net buyers. So there's strong interest in gold at the moment. So I think money will go to gold. We're getting closer to the printing of cash in the USA now. John Williams, who's the deputy chairman of the Federal Reserve, next in line to Alan Greenspan, and also the New York Federal Reserve president, said about, I think it was 4 or 5 days ago, that they're very close to buying bonds again. That's quantitative easing. So when they buy bonds, they basically print money, that's the liability side, to buy the government bonds, that's the asset side. But basically that's putting money into the system. And the reason they'd want to do that is to provide, to keep he said to keep short-term interest rates down, but actually the reality is here, it's yield curve control to keep the longer-term interest rates down so that the government can continue to borrow money without the interest rates spiraling out of control. But the consequence, of course, of that is there is more money in the system, and of course that money has to find its way into assets. So the day they start doing that will be very bullish for gold. If we do go into this hyperinflationary spiral, and I don't think it's going to get that far. I think long before we get to that, there'll be all kinds of capital controls and restrictions of what you can do with your money. kind of basically saying you can only spend, probably they'll say something like this, you can only spend digital dollars or only spend the CBDCs, and then there's a limitation as to how much you can put into your digital dollars or how much you can transfer from your bank to the CBDC. And through that sort of control, they'll try and control the inverted commas wicked speculators who are betting against the currency. So the export of 400 kilo bars to China are quite a high level, and they're saying that these bars can't be destined to retail use because China, on the Shanghai Stock Exchange, it's on the Shanghai Gold Exchange, it's 1 kilo, 3 kilo, and 10 kilo bars. I think they said, whereas the bars being exported to China are 400 ounce bars, which are typically the type of bars used by central banks. So there was that. And the second thing that I came across, which again, it's secondhand information, is there's an awful lot of gold being mined in China. I think it's something like 20% of the world's annual gold supply being mined in China. And there's heavy export restrictions on gold from China. And the question mark is, where is all that gold going? Is China secretly acquiring gold through the back door by buying up some of its own gold production? The numbers which I came up with from various sources all add up to China having 7,000 tons of gold, which is about 3 times the officially announced reserves. And that comes from 25% of domestic production going into the China vaults, the net withdrawals from the Shanghai Stock Exchange, which is not going to the public at large, the subtracting the total consumption in China, which is 24,000 tons of private holdings going to jewelry. But I added all the numbers up and I came to a figure of 7,000 tons would be their current holdings compared with the 2,300 they claim. But one significant point to perhaps add fuel to the fire is the fact that China's foreign exchange reserves, the official reserves that they declare every month, have been broadly static since 2014. They plateaued, so they're going up and up every year after year. Their trade was going up. They had this huge surplus every year. So the reserves were going up every year until 2014. And yet they appeared to plateau, according to the official numbers in 2014, yet the trade and the surplus, the Chinese surplus, keeps going up year after year after year. So the question is,
so you're saying they're spending it on gold? That's what you're saying?
Well, how come they're saying their reserves are not really increasing, yet they've still got a growing economy, growing trade surplus? Where's it all going? Well, it could be going into gold. We don't know, or maybe they're throwing it away. I don't know.
Mario Innecco highlights China's growing influence in the precious metals market, noting that the country's secretive gold purchases are fueling a record rally. While many analysts claim China holds over 30,000 tons of gold, Innecco clarifies that this figure is different from some research, such as that of Alastair MacLeod, and reflects a focus on recent activity rather than total reserves. He emphasizes that China is now the world's top gold producer, and contrary to popular belief, the U.S. may hold less gold than reported, while China possesses far more, a dynamic that could weigh on the dollar. Innecco also points to China's tightening of silver export controls. In the country, gold and silver futures require physical deposits, and recent restrictions indicate that authorities aim to retain more metal domestically. While not a complete shutdown, stricter export licensing for 2026 to 2027 now places silver alongside other tightly controlled materials like rare earths. These moves, Innecco suggests, fit into a broader trend of commodity nationalism. He recalls Zoltan Patzar's prediction from a few years ago that commodities would gain increasing importance, a trend Innecco agrees with given the fracturing of globalization. As a result, institutions like the LBMA may struggle to rely solely on paper trading in the future, as investors increasingly demand physical gold and silver rather than just contracts. Let's get back to the interview.
I want to ask the question, if the stock market crashes, will the gold and silver miners also crash as they are linked to the stock market? Back in April, they didn't. So they might initially, but eventually, I don't think so. I think a lot of the money in the stock market, general stock market, will move to gold and the miners. Touched upon this a few times, this chart. So on the left, it's the chart of the one gold mark in paper marks. And to me, this chart looks really similar to the one that's evolving right now. And of course, this ended in hyperinflation in Germany in 1923. And I think it started in the I think summer of 22 is when it broke above this line. And by the end of 23, like you said, no one wanted to part with their gold, for like I don't know, 1 trillion or 1 quadrillion marks. It's ridiculous. But of course, this chart here on the right it's a bigger fractal, but it looks very similar. And we started, I guess, we took off March, I think, or spring of 2024. So it might take a few more years because this one here this is over a shorter period of time. So it took a year and a half. So this could take maybe a little longer. China's secretive gold purchases help fuel record rally. And this is not like the research we've seen from people like Alistair McLeod and others that say that China has over 30,000 tons. This is just this year. Apparently, I think it's Jan Neuenhaus. He's been looking at the customs number between the UK and China, and they've increased a lot. A lot of the analysts that say China has over, officially over 30,000 tons, and that's what they've been saying. China now is the biggest gold producer. So yeah, I think, the rest of the world, people that don't follow gold like we do, they think, oh, the US has over 8,000 tons. China only has 2,000. The US is top dog, but I think it's the reverse, actually. I don't think the US has as much as they say. They would have done an audit already, and China has a lot more. And I'm not defending China. I'm just looking at the facts. And I think that's bearish for the dollar. So a lot of people talk about the Great Taking, and I'm aware of that. I mean, I covered it when it came out, that book, a few years ago. And the other risk is counterparty risk. The gold and silver miners. I know some people say you got to take the certificates, but when you have the certificates, if you want to sell that stock, you got to send it back. It's a bit complicated. So it's a risk I'm willing to take right now to have those miners and the Great Taking. As far as physical, like Clive said, you can't it's risky to have it all in your possession. That's why I think it's here in the UK. I trust like gold investments. They have their own private vaults and they insure it for you. I don't trust the Royal Mint. And I don't trust the banks. Some banks are pushing you to buy their safety
deposit box.
They're
Okay.
selling that as if it is yours, but I can tell you if there's a banking crisis,
They'll seize it.
They'll seize it. So I trust people more like gold investments because they're not a financial institution. But in Switzerland, though, I think where Clive is, it's a bit different. There's a lot of private banks that are not really lending money. They're managing people's assets, so they would be safer. But here in the UK, I don't see any safety in the banks. China shuts silver exports because, yeah, like where is it? There's this guy here. Latest update. Swiss expert on precious metals. China has pulled the trigger on silver. In China, you can only trade gold and silver futures if the metal is physically deposited. And it says this past Friday, the Chinese said no more deliveries. We're keeping our metal. I'm not too sure that's 100% right because I was looking here. They have put some limits on things, but it's not 100%. Let me see here. Yeah, here it says China has not completely shut down silver export, but has implemented stricter export licensing rules for 2026, 2027, adding it to a list of tightly controlled materials like rare earths. So yeah, I agree with that. I think Don't know if you guys remember that Zoltan Pozsar a few years, I think 3 years ago, he said that commodities are going to become a lot more important. Yeah, commodity nationalism, and I think it will because the world is fracturing. We don't globalization's kind of splitting into blocks. So yeah, and I think I don't think the LBMA will be able to keep just trading paper. People eventually will want the physical silver.
China's covert gold purchases occur through channels that go well beyond standard central bank transactions. Although the People's Bank of China officially reports holdings of around 2,235 tons, market analysts have noted substantial gaps between these reported figures and the country's apparent actual accumulation. China's growing control over gold and silver, combined with its rising production and strategic accumulation, signals a shift in the global precious metals landscape. Tightened export rules increased domestic holdings, and the preference for physical over paper trading reflect a broader move toward commodity security as globalization fragments. These developments suggest that gold and silver will play an increasingly central role in financial stability, while traditional assumptions about reserves and market dominance may no longer hold true. Have you ever wondered where all the world's gold and silver are really going? So stay tuned. Don't forget to like and subscribe for more daily insights. Thank you for your support, and I hope you enjoy the video.